We're in a very fortunate position. We do get to shape the skyline of London. And that's the question, isn't it?
It's $1 million question.
It's probably $1 billion question. You can have an environment where the economy's growing, interest rates are coming down, unemployment's low. That's a pretty good time to be in real estate. I think it was Mark Twain, buy land, they're not making it anymore.
Exactly.
I hope that for me, for British Land, that we deliver really great real estate that stands the test of time, that it isn't being demolished in 20 or 30 years' time.
Simon, welcome to the new forum. Thank you very much for being here.
Thank you for having me, Charlie. Delighted to be here.
So I'd like to begin with your earliest memories of real estate.
Earliest memories of real estate. Well, my father worked in real estate. He was a chartered surveyor based down in in Exeter in the commercial department of a firm called Fulford. So that was my introduction to real estate.
Did he encourage you to get into real estate, or was he quite a hands-off parent?
He didn't really, and I've told this story before, and I think people sometimes want to do something different from what their father or their mother did as a career. So when I was growing up, apparently I said I didn't want to work in real estate, and actually the way I found myself in real estate was really an accident. So I probably went out of my way not to be in real estate initially.
You started in chartered accountancy and then fixed income at UBS. So not necessarily as traditional as a path as others might take into the industry. How did that unfold?
Absolutely. I'd say it was a roundabout way to real estate. I started in accountancy, and that was because I left university. I knew I wanted to work in finance and business in some way, and that sounds very vague. And at the time, my understanding of the world of commerce was pretty vague. And I spoke to a couple of family friends, and they said, actually, if you're not sure exactly what you want to do, go and get a qualification, go and do an ACA, and then you can work out which areas of business interest you, and you've got a good foundation in financials. And that was super advice, and that's what I did initially. Worked at Arthur Andersen, the firm that ultimately went bust with Enron. You're probably too young to remember that.
I do know a bit about Enron, yeah.
You're probably, how old are you?
I'm 24.
Okay, yeah, so it probably was about 24 years ago.
Yes.
I think it was the turn of the century that they went bankrupt, which was a shame because it was a great business and a great training ground. And when you start as in an ACA qualification, you start with a load of graduates. So there were about 30 or 40 of us going into their training program. You learn the academic side of it, but you're also out seeing clients and learning from colleagues at a really early age. So I think that was a good foundation. Qualified, the decision was, did I want to stay as an accountant and work my way up to be a partner? And I thought, perhaps not. An opportunity came to go and work with UBS. That was in what was at the time called a middle office role. So I was a product controller there initially, using my accountancy skills to basically be a financial controller for the trading desk. And then I got the opportunity to go onto the trading desk as a trader, but hadn't really anticipated that. And that was a very sort of big change in shift of emphasis, going from auditing the numbers and looking at the numbers to actually trying to create the profits helping to contribute to the profits of the bank.
Are those foundations you'd recommend young people lay at the very beginning of their careers to give them maybe an extra edge once they either move into a different industry or keep going within a related industry like finance?
Yeah, my route to real estate, as I say, was quite an unusual one, but I think that combination of having a sound grounding in financials and being able to read a balance sheet, understand a P&L account is important. It's not the only route, but it's a really good route. And then I think going onto the trading floor was more about how it changed me, and I probably...
How did it change you?
Well, inherently probably a bit risk averse.
Okay.
And on the trading floor,
trading floors are quite risky places, aren't they?
Yeah, well, people say that, but I think it's being risk aware.
Okay.
And probably being more decisive.
Okay.
I remember someone on my first day on the trading desk said, so what are you going to do? Are you going to buy or sell? And I was like, well, weren't you going to train me? And then I get to make a decision. And they said, no, we make hundreds of decisions every day. And what's important is more than 51% of those decisions are right. It doesn't need to be 100%, it needs to be 51%. And look, people aim to get more decisions right than 51%. But the point is, if you do get 51% of decision,
money, yeah.
You're making a profit. And that stuck with me a little bit, and probably that maybe inherent conservatism, I've become a bit more decisive, and I think also round the edges much more conscious of risk when's the time to take risks, when's the time to pull back from it. So I think a broad experience for people listening to this at the start of their careers is good, and it won't be the same career path I've had, but if you can get these different experiences that push you in different ways, then that's a good foundation, I think.
It seems like it's been very helpful, especially now that you're CEO of British Land. And just a couple figures to start with. British Land, as I understand it, has £12.7 billion of assets under management. You have about 21 million square feet, and you have what are some other key metrics, key figures on British Land? About 450 million in income on an annual basis.
That's right.
So for across British Land's business, you have the investment side of things and you have the development side of things. Can you give us a bit of an overview of that?
Yeah, sure. So British Land, we're a listed property company. As you say, there's two elements of our business. There's investment and development. We think of the business in terms of the sectors we're invested in. We're a diversified real estate investment trust. So we're not just in one sector of the property market. Today we're in three primary sectors. We have what we describe as our campuses. These are in the golden triangle of London, Oxford and Cambridge, primarily London, primarily office-based campuses. And this is where British Land owns and operates, sometimes with partners, between 20, 40 acres, in certain parts of London where there's very good transport infrastructure near mainline stations. We control all of the public realm, the landscaping, and then we've developed or bought the buildings on those campuses, and we deliver very high quality office environment for our customers, and they like it because they can take space with British Land, and because we control the real estate in a particular part of London, they can grow with us. So sometimes businesses become a customer of British Land and take 10,000 square feet of space, and then 5 years later they're in 100,000 square feet of space because we're able to move them around.
It's quite scalable. It's a scalable side of the business that you can accommodate the smaller tenants, you can accommodate the larger tenants. So it seems that they can grow, I assume, also as you grow.
Absolutely, and that's exactly how we can facilitate their growth, and having that diverse range of businesses at different stages of their growth is really good, because often you get large businesses that want to be alongside smaller businesses. We see that particularly in the science and technology.
A lot of knowledge
space.
Spillover, I imagine, and still spill over that.
Exactly that, and Broadgate, which is one of our office campuses, which sits above Liverpool Street Station, so where you've got the very good transport connectivity, particularly with the arrival of the Elizabeth line. There, we traditionally had a lot of banks and financial institutions, and then we saw that Old Street, the tech roundabout, Silicon Roundabout, there were these tech businesses, and some of those were in fintech, and they wanted to be next to the banks, and the banks also wanted to be next to those businesses. So we've created a fintech cluster alongside the more traditional banks. And going back to your question, so there's a campus bit of our business, that's about 60%. We then have a retail park business that's getting towards about 30% of our business today. We just bought some retail parks over the last couple of weeks, which we announced today. We really like that business. It's benefiting from a couple of trends that are impacting retail. So I think most people know what a retail park is, but for those that don't, these are schemes that sit on the edge of towns and cities. They sit on a major road, an arterial road, have lots of car parking, free car parking, and then the stores are quite big steel boxes effectively. And why that business is good today is The space is very affordable for the retailers. So over the last maybe 5-10 years, we've seen essential retail doing well in the UK.
That's interesting, because one would associate retail with decline, especially high street retail and more standalone retail with the rise of e-commerce. But this seems relatively well insulated, your retail business.
Yeah.
Why do you think that is?
I think it's fair to say all of retail was probably in decline from 2015 to 2020 because of the rise of e-commerce. And then actually we'd got to a position in the UK where we had too many stores and the rents were too high on those stores.
So there was a correction and it became repriced, and at that point it was a viable business.
It was a viable business. We'd been in it. We'd been selling retail from 2015 through to 2020, and then we took a contrarian view and we started investing into retail, the retail parks, and that was because we could see the rents were affordable for the retailers, which was important. And then the other aspect was we saw this growth of essential and discount retail in this country, maybe with the cost of living crisis, and they were taking space. And then the other aspect was around e-commerce and really what type of physical retail best complemented online. And it is the retail park format, because people can drive to the stores, they've got free car parking, they can collect their goods, click and collect, they can return their goods to store, or they can just shop in the store. So we've seen growth coming from essential retail and what's known as the multi-channel specialists.
I would like to thank the English Speaking Union and the team at Dartmouth House for hosting us here for this interview. The ESU is an international organisation based in the UK that promotes public speaking, communication, and cross-cultural understanding amongst young people globally. They host a variety of programs and events aimed at furthering these skills, such as public speaking competitions, school workshops, and foreign exchange programs. The English-Speaking Union was formed in the belief that more effective communication between nations would lead to improved global understanding. This belief still stands strong today. As communities become ever more multicultural and societies more divided, there has never been a greater need to understand different perspectives and opinions. How has public speaking been important in your personal and professional life?
Well, that's a topic I'm really interested in. I went to a state school, and I think I was given the opportunity to avoid doing any public speaking. And it's always something I found quite difficult, and I have to work at it a lot. And I kind of look back and think I had a brilliant education, but that was one area where I would have loved to have done more of it at an early age and be taught how to do it really well. And I see in my children that they are getting a better preparation in that. They started early at school with show and tell, and I don't think we ever did that, but hugely important, and I think an area that I'm very keen to see that we put more investment in our youngsters as they're in school from a very early age.
How does public speaking contribute to leadership and influence?
It's hugely important, because as a leader, you're there to set a vision, and you might have the best ideas, but you need to be able to communicate them, and you need to win hearts and minds and get people to buy into it and say, yeah, I want to pull in that direction. And it is something I've found more difficult. I'm good with smaller groups, but then when it's a bigger group, I think, am I managing to make that connection? So yeah, I try and invest in practicing it, and I think everyone should.
Why do you think, from a behavioural perspective, people still really enjoy going to these retail parks? It's probably quite a social experience as well.
Yeah, I think so. People talk about experiential retail. Often they're talking about, going into the West End of London or to a shopping centre, and I think that is important. On our retail parks, we try and make it an enjoyable experience, but kind of a frictionless experience for the customer. They're going there to do a mission. They're going there to pick up groceries, or, as I say, return goods to store, or do click and collect. So that thing about being able to park easily, ample car parking, and then having the right type of stores where the retailers can display all of their product range. So when they go into the store, it's a nice store experience for them. And then we do have F&B and leisure on many of ours, but it's that combination of mission-based and an element of leisure and being able to go to a restaurant.
And then you have logistics as another aspect of
That's the third plank. The newer part of our business is a very focused logistics strategy. It's based all in London. Some people call it urban logistics, last mile logistics. This is about having facilities that allow goods to come to customers on very short delivery times and on very predictable in terms of when goods are going to be delivered. We really like London as a place to do that, because in real estate it's about having strong demand and limited supply. And in London, what's happened over many years, a lot of our industrial logistics land's been converted to other uses. So you start with constrained supply, demand's growing because of what's happening with e-commerce and customers' rising expectations about that priority delivery. So getting goods quickly when they want it. And then another aspect that's really helping at the moment is when you look at London, there's a lot of concerns about pollution and carbon, and so the facilities we're providing allow for fully electric fleets, so the goods coming to your home.
It's a very sustainable side of your business.
We think so.
Yeah.
We think so, and sustainability is important across British land, but it's a key driver of this particular business. Just like in our office space as well, we've seen a lot of businesses set carbon targets, and often a big part of their carbon footprint is their office. And so if we can deliver low carbon real estate, then hopefully they'll take more space with us and pay us higher rents, and that's how we make money.
It's quite interesting because this is a type of real estate that really didn't exist in nearly the same way 20 or 30 years ago. E-commerce wasn't a thing, last mile certainly wasn't a thing. There are a number of real estate types that are developing, like logistics real estate, that cater to the changing world and changing demand of consumers. Another real estate type might be data centers.
Yeah,
to
they're very
handle,
much flavour of the month for the moment.
handle.
Yeah.
Well, where do you stand on those? You don't have those in your portfolio.
We don't. I think when you look at the sectors you're in, we do need an element of focus. And the data centre space has really good, solid fundamentals, particularly accelerated by what's happening in AI and the huge amounts of data that and computing power that AI uses. But I think to be in a market, you need to have a particular edge.
Yes.
And with data centres, really you need to have the right sites with lots of power. And our portfolio today is London-based and retail across the UK. It's not impossible. Where we've got opportunities in the portfolio, we'll take advantage of them. But there are a number of players doing that quite well. And so we need to stay where we've got a competitive edge.
In the same way these types of real estates have emerged in the last 20, 30 years, what do you foresee for the next 20 or 30 years?
Well, that's the question, isn't it?
It's $1 million question.
It's probably $1 billion question or more. We give a lot of thought to some of those long-term trends and which sectors are going to benefit from tailwinds and where might there be headwinds. Going forward sort of 20, 30 years is quite long, but where we're seeing some of the obvious areas, you mentioned technology. In our business, one of the ways in which we're harnessing that and looking to benefit from the trends is what we're doing in the science and technology space, because I mentioned our campus business. So today, about 25% of our customers are in the science and technology space within that business.
It's very cool because you wouldn't necessarily think of a real estate company as an incubator for innovation to bring all these people together, but that's exactly what you're doing. So you're this great steward of innovation.
Absolutely. And look, we're not the ones who are doing the innovation. We're just providing, we talk about providing the canvas. And of course, if you think about where innovation's happened historically it's happened in a number of places, but university campuses have been part of them. And we found ourselves in this situation where we had this campus that we'd owned for 40 years at the top of the Tottenham Court Road, right in the middle of London's Knowledge Quarter. And that's just a really exciting part of London at the moment because, as I mentioned, sort of AI is a big growth area and it's helping accelerate the pace of scientific discovery and also those scientific discoveries being turned into products. And that's particularly happening in the Knowledge Quarter. I think it's linked to UCL's computer science department, which is regarded as one of the best in the world, it's certainly in the country. And so we've found ourselves in a situation where we had the space, there's demand coming through from those businesses, but we need to make sure we're delivering the right types of space. So we're delivering some lab space. People get very excited about lab space because it's different from offices, but we are delivering some. It's only going to be a relatively small proportion, but also we're delivering dry labs, traditional office space, but in the right locations and creating that cluster where like-minded businesses can meet. And we talk a lot about sort of serendipitous encounters where you go to the coffee shop and you bump into someone at a competing firm who's got a good idea, or you bump into one of the academics you know. And I think this is how breakthrough discoveries are made and the flow of information. And obviously technology really facilitates that, but there's no substitute for face-to-face sort of serendipitous encounters or discussions.
Another aspect of your business is on the development side, residential development, and one of the larger developments is Canada Water. I find your approach incredibly interesting because when a lot of people think of real estate developers, they think of these an evil collection of people just trying to milk the land for all it's worth. But you have an approach that's far more sustainable. You have commitment to green space. You go into the communities. You say, what are you looking for in this development? And you're very in touch on the ground. How are you able to balance the more sustainable side of real estate development and putting in infrastructure for the good of the community with returns, which traditionally you'd have had higher returns, you might have to sacrifice some of those, but you're creating these crazy, really cool town centres that are also hubs of activity in the same way the campuses are?
Yeah, it's a question that gets asked a lot. How do you balance driving commercial advantage with doing the right thing? And I think what we found and what we believe, and I think there's really good examples of that, is actually the two go hand in hand. So we've got this mission statement, vision, creating places people prefer. And this is about creating a great place. And a great place is one that's fully integrated into the local community. You can't just sort of dump a new development in an area and not look to...
I think that's what everyone, like if you watch the movie Up, I don't know if your kids are a fan of that, but you don't want to be that type of developer, seizing the old man's house. But it seems that you guys do a very good job of making sure that you go into the community, you say, what are you looking for? You can probably talk more about this, but there are a number of outreach programs as well. So it's a really constructive and mutually beneficial relationship.
Totally. I think for Canada Water, which you mentioned, I think that we held or connected with 10,000 people in the local community before we submitted the planning consent on that scheme, because we wanted to get a scheme that would be there for the benefit of the local community.
Were they surprised?
Yeah, I think they were. It's becoming more common now, but this was 5 years ago, and actually that process probably started more like 7 years ago. And I think they were surprised and pleasantly surprised and responded really well for it. So hopefully we're coming up with something that is great real estate, is a great place. The whole community will benefit. So we do see that going hand in hand, and we don't see that there's a conflict or a contradiction there. And it's the same on the environmental side. As I mentioned earlier, particularly in our office business, all of those customers are setting net zero targets. If you look at carbon emissions, there's different measures of it, but crudely, the built environment accounts for maybe 30 to 40% of carbon emissions, including residential. So you can see these businesses, their buildings are often the biggest element of their carbon footprint alongside travel. And if we can provide them with that green real estate, we're solving one of their problems. So our commitment to reduce carbon emissions from our buildings and deliver buildings when we're developing with a lower carbon content, I think is driving a commercial advantage for the business. So in many ways, we've seen this as an opportunity. I think there are other industries out there where it can be a challenge, but for real estate, creating the right buildings that have the right environmental credentials.
Zero embodied carbon, that's a big step that you guys take.
Yeah, zero embodied carbon would probably be a big step. So what we're looking to do is halve the amount of carbon in new developments. And at the moment, we're heading towards that. We're probably something like 2/3, 3/4 of the way to doing that. We want to do it by 2030. We are slightly reliant on having new material innovation and being able to use lower carbon materials. So we have to work with our supply chain. But of course, the easiest way to save carbon in that way is to take an existing building and keep it rather than doing your example of knocking it down. And so we try to retain as much of original buildings as possible. We have this retrofit first approach, but sometimes it's not possible. And at Canada Water, it's ground up development from a car park. So you're putting up a new building and there will be carbon in that. We do offset.
But you get to do it right that time around, right?
Yeah.
It's not.
And if
you
we
get
develop
it right the first time. So.
Yeah, and if we develop a really good building that has a long life, that is less likely to be knocked down in the future, then that really helps. And importantly, when you do deliver a new building, you can deliver it so that on an ongoing basis, it's very efficient from an operating perspective.
We've just had a change in government a couple months ago.
Yeah.
What would you like to see from a legislative perspective to encourage more external investment in UK real estate and grow the sector in a way that benefits the British economy?
It's a great question. At one level, my answer's sort of quite superficial, simple. I think one of the biggest things that might have been deterring that investment over the last few years has been political instability.
Right.
And so we've talked a lot about having a clearer regulatory environment and political stability being very important. In our industry, the minister is housing and planning, and I'll get the number slightly wrong, but it's something like 13 housing and planning ministers in the last 10 years in an area that's actually pretty complex. Planning's very complex. And so I was fortunate to meet who was then the shadow housing and planning minister, Matthew Pennycook. I suppose it was probably about a year ago, 18 months ago. And he said to me, what's the one thing that we can do that would really help? And I said, well, the one thing that would be really helpful is
Stability.
if you are elected, you then become the minister.
Oh,
and,
yeah.
And fortunately, he has.
Yes.
And so that's great. And so he's got, he's had the shadow brief. He's now the minister.
Yeah.
So
there's continuity and stability there.
And that is really, really important in our industry. And obviously things like the economy, a more stable economy, a growing economy, obviously encourages investment. But some of the stuff around planning, we're cautiously optimistic about. We've worked with both the Conservatives and Labour over the last couple of years on how could you reform the planning system to encourage more development of homes, but in a way that's sensitive to green belt and such like. And I think the moves or suggested moves in that area are going to be very positive. So that's good for our business, but I think it's very good for the UK economy.
Speaking of stability, one of the areas of maybe concern to crisis is the Chinese economy and the Chinese real estate sector. Over, I believe, from 2021 onwards, it started to falter, and then we had the collapse a couple years ago, ongoing, of some of the large Chinese real estate companies. Are you worried about the spillover effects of that if there is a greater decline? The FT just released an article about a week ago saying that the office space, there was lower occupancy in office space in Chinese buildings than during the pandemic. So it seems to be that there's, a dark cloud potentially overhead. Is that something you're worried about here?
Probably doesn't impact us too much directly.
Do you benefit from that?
I was gonna say, as you asked the question, I was thinking, how does
So
it impact
maybe
us?
those investors who would put their money there flock to the basically safest London-based real estate?
I think there's a number of things. At one point, there was a huge amount of construction activity in China, and that probably has slowed down a bit.
Yeah.
And so that was putting pressure on global supply chains, and probably pushing up the price of materials that we will use in our development. So we've definitely seen construction costs level off. We probably saw 20% cost inflation over the last year or 18 months, and it's leveled off now. Not all of that's down to a slowdown in Chinese construction. It's more down to supply chains normalizing post-COVID. But yeah, I think that's one of the factors, one of the ways in which we'll benefit. And then we have seen a number of Chinese developers come to the UK. They're probably going to retrench home. That might create opportunities for us to buy sites that wouldn't otherwise be available. But I think other than that, we're relatively insulated from that. We're only based in the UK as a property company.
Would you ever go international, or is this really your,
Yeah, probably unlikely. We did have a brief experience, wrong time, wrong product. It was about 2007. We invested into. That's
an unfortunate time to invest.
It might have been 2005, 2007. We invested into Europe in retail, and that didn't end particularly well. And timing is hard sometimes, and so if you've got better timing, would it be better? I don't know, but I do believe in real estate there's a lot of local knowledge which is very, very valuable. I mentioned our campus in Regent's Place that we've owned for 40 years. So we've worked with the local borough of Camden for 40 years. We understand what they want to achieve, what the local community wants to achieve. We understand the UK planning regulations, what the customer requirements are. And when you go overseas, you don't have initially, at least, all of that expertise.
There's a dissonance, there's a disconnection there.
I think if you do it, you have to do it with local teams. I've been in other businesses that have been pan-European, and they've been a success because they've had local teams on the ground.
And culturally, they know consumer habits on the ground.
Exactly that. So you can do it, but the way we look at it today, we've got ample opportunity in the UK. We feel like the UK economy is inflecting. It's been a tough period to be in real estate over the last 5 years. We had Brexit, we had COVID, higher interest rates. Within our business, because we had offices and retail, we had headwinds from work from home, hybrid working. We talked about e-commerce, but actually a lot of those headwinds are easing. There's a visibility on what customers want in terms of retail and those retail parks that I spoke about. And I think if we can have an environment where the economy's growing, might not be very exciting, but it's growing, interest rates are coming down, unemployment's low, that's a pretty good time to be in real estate. Alongside, we've continued over the last 5 years to lease very well in our business. So it's been
96% occupancy, 96.2%.
You've done your homework,
something like that, which is that's a pretty tidy operation.
It's pretty good. So we've got the right product. People want to be in it. And then really what we've had to deal with over the last 4 or 5 years has been more about sentiment. And it feels early days and it can easily get upset, but it feels like sentiment's improving.
Another thing people are talking a lot about, not just in real estate, but more widely, is AI. And the effects that AI might have on various industries. I went through your annual report. You had a section in AI. What are you worried about? What are you optimistic about? And how will it change specifically British Land's business?
Yeah, and look, it's still, I think for most businesses, it's still early days in people's thinking around this. So maybe taking those in turn. What do I worry about? I worry about it fundamentally shifting demand. Just as we saw with e-commerce and retail, could it be another fundamental shift in the type of real estate that people want? And I think it will be at one level. We've thought about it a lot in our office business, because what it's going to mean is people can be more effective with their time. They might not want space in the same areas they wanted it previously. We're fairly confident that actually in London, because we provide 80% of our office space will be a business's UK headquarters. So it's headquarter offices, and we feel as though the senior positions within a company will probably be less disrupted by AI, and actually it will be an opportunity for most companies to grow. And so that would give us some element of insulation. Whereas I think if you're owning call centres in other parts of the country, a lot of that's going to be automated. So where you might have needed 500 staff, you might need 100 staff. So that's reducing the requirements for space. Whereas you can never be sure on these things, and you need to keep an eye on the horizon. But our sense is providing the very best offices that we do is where the demand's likely to be the strongest. So that's one thing for AI we've given some thought to. Could it be the next wave of digital innovation in retail? So improve the online experience even further so that more goes online rather than through the physical store.
Well, you have a great hedge on that, because you have both the retail and you have logistics. So you know both sides of that. Yeah,
but even on logistics, it probably is going to mean that the flow of goods can be more efficient. That might reduce demand for warehouses. But as I said to you, there are then huge opportunities with what we're doing in the Knowledge Quarter at Regent's Place and those new businesses that are forming. Overall, we're very optimistic and think this is going to be the next wave of productivity growth, economic growth. And I think the UK, if they get it right, could be in quite a good place here. We do have a very good history in terms of computer science and data science capability. It's just making sure we make the most of it. And then look, there's great opportunities within British Land to streamline processes, mean that our people are doing less manual processing and more value add work. And we're at the early days of kind of trying to harvest that.
One interesting sort of thought experiment from a macroeconomic perspective. When I was doing the research, I was thinking about where land stacks up in the grand scheme of things within an economy. And you have economies comprised of land, labour and capital. And AI is quite a fascinating phenomenon because it's devaluing labour. Labour is in a world where you can have a computer system, a large language model, do the work of an individual for a fraction of the price. You're seeing labour go down in value. You're seeing also capital as a derivative of labour, because of course all capital comes from labour, going down in value. The third of that trio is land. Do you think, I mean, what do you see that shift as far as those three kind of macro silos? What do you see for your business? But is there also a future where landowners, maybe not just people like you with British Land, but like farmers, right, could be the billionaires of tomorrow?
Yeah.
If you have labour going to almost zero and capital going to almost zero, like where does that leave land? As the head of British Land.
Yeah. You're taking me back to my A-level and university economics there, and I'm trying to get my head around that. I think it was Mark Twain was buy land, they're not making it anymore.
Exactly.
So there's certainly something there. It's interesting what you said. I just sort of processing it. So does it devalue labour? Because you could argue, to my earlier point about how we use it within British Land, it makes labour more productive.
Right.
So
but does it cut down on the labour force and make fewer people more productive rather than having? I don't know.
No,
I'm no expert.
I guess
I don't have an economics degree from Cambridge.
You had the people moving from the fields to the cities to the first industrial revolution. I think experience suggests that each time there's one of these big waves of technological change, people do get left behind who don't re-skill, but generally it's a positive for labour because it allows labour to do more. It allows the economic growth rate of the country to increase. And I guess one of the side effects is people get more leisure time because their productivity, their earnings increase. They can choose more how they spend their time. So I think if we, as a country, if we can manage the transition well and re-skill people, then that's a huge opportunity. So I'd probably be a bit more positive that Labour can really benefit from that. But that's just off the sort of top of my head. But I think your point is absolutely right. Land is a scarce resource, and that is one of the beauties of real estate, actually, that it's supply constrained. We've got a growing population, and that's why real estate tends to be a good long-term investment. And that's why you asked a question earlier about sort of foreign investors coming into UK real estate with the right conditions. I think the UK is a great place for people to invest.
Speaking of investing, I spend a lot of time in the States, and there's quite a different real estate market there to here, where you have a lot of multifamily properties, property ownership, and you can have smaller investors with not much capital start with a duplex, get 4 units, 10 units, and all of a sudden they have a pretty sizable portfolio. That's not so much of a phenomenon here. But if an individual, maybe someone much younger, had ambitions to start a real estate company from the ground up, I guess if you had to do that when you were younger, you don't have the experience you do now, how would you go about doing that?
Wow, that's the question. And I think probably the reality is we've seen less of that happening. If you think what you described in the US, we had the sort of buy-to-let revolution, didn't we? In
2016 or whatever it was.
Yeah, and even for going back sort of...
that was when it started its decline, right? Because they brought in the tax laws that meant that mortgages weren't tax deductible or something like that.
That's right, and it's probably like late 90s that started, and people did buy one flat, buy one house, and you saw a situation where values went up. They were then able to put debt on it, buy another one, and they were able to assemble those portfolios. It's definitely harder today to do that. Some of that's for good reason. There's been more of a professionalisation of residential, and if you want to rent a home, you're tending to get a more consistent level of quality because it's more of a professionalised business than individuals doing that, owning 1 or 2 homes. And there's a regulatory burden. There's finding with higher interest rates, it's been harder to get the maths of that to work. But to your question, launching a property company today, how would you go about it? I mean, I'd go back to that thing that I was talking about earlier. It's about finding markets where they're supply constrained. You can see there's a change in demand, and you can do something that's different and special. So I wonder whether in the future...
Do you know where that would be for you?
Well, I was just wondering in the future, the high street is very much out of favour in this country at the moment. So we talked about what's happening on the retail parks, bigger shopping centres, but the high street has certainly suffered, and I'm convinced that creates an opportunity. And perhaps that opportunity is more at a town level, a micro level, than a sort of national level. And if someone wanted to assemble a portfolio, maybe that's the place to do it. And they'd have to be creative, do something different. It isn't going to work to open a load of shops in the way that, or have a load of businesses come in and open shops. But there are emerging, changing uses, aren't there, of the high street? See, I mean, we've as a family, we do quite a lot of these escape rooms, and
those are good fun.
They're really good fun, and we went.
Who's the best in your family? Are you?
Oh no, definitely, definitely not me. They normally do better when I'm not there. It's the kids, and every now and then.
I would think as a CEO, you'd have all your ducks in a row. You'd say, right, you here, you there, work on this problem.
No, I no way try and control the family and that, and they go where they want to go. But it's really enjoyable to see the children solving these problems, isn't it? It's great. But the reason I raise that is we went to one of these escape rooms. It was in Canterbury, and we went to it 6 months ago, and they had one facility with 6 escape rooms. We went back a couple of weeks ago, and they've now opened up. They were on an industrial estate. They've kept that. They've opened on the high street, and then they're talking about opening another one. So I think they've gone from 6 to 10, and look, it seems to be in really high demand. So there's going to be uses of space. I think
British Land should start an escape room business.
Yeah, I'll try and get that. I'll try and get that past the board.
You should lobby hard. Maybe they should come and do experiences with. You should get the board out there and really test them.
Certainly, our management team. It'd be a good way to test out the management team, wouldn't it? But my point is, there will be opportunities. Where there's distress, there's opportunities. And I think you asked the question, how would someone starting out in their career build a property company? And that could be a way to do it, literally just off the top of my head.
That's a great, I love that. I love that. Part of your strategy is you stress test your portfolio. You have crisis management plans in place in case there's a scenario like we encountered in 2020. If there were another pandemic tomorrow, what would your approach be? How would your approach differ from the last time?
Oh, I'm hoping there isn't another pandemic tomorrow. How would it change? Look, we were pretty pleased with how we dealt with the pandemic. Not perfectly, but we were fairly pleased. And in a sense, in an ironic sense, we got quite lucky because running into the pandemic, the item that everyone was worrying about on their risk register was a hard Brexit. You might recall everyone was like, what will happen in a hard Brexit? Will supply chains fall away? Will the UK not be able to get food to the people and all this sort of stuff? And so we had spent a lot of time on our crisis response plan for the wrong risk, as it turned out. But because we'd done that, we were relatively match fit when the pandemic struck. So you do these exercises as corporates where they chuck a scenario on you and you try and find the best way of dealing with it. But we had the technology in place that meant we could move to remote working. And we had a sort of setup as how we would work as a management company. So we're in a pretty good place. But as I say, we didn't do everything perfectly. I think it took a little bit of time for us to work out that we couldn't treat our customers in a homogenous way. We had to treat them in different ways that were appropriate. And this was really...
What are examples of that?
This was kind of down to fairness, actually. So I've talked about our campuses. On our campuses, we have a lot of independent traders because we like interesting, non-chain coffee shops, bakeries, that kind of thing. And those kind of businesses were fundamentally impacted by the pandemic because their sole source of income was shut off overnight. So it was absolutely appropriate that we should just forgive the rent on those units. And we did. But was it fair that we also forgave the rent for a big retailer that's a bigger listed company than British Land, who we had a contract with? Probably not. And so that took us a little bit of time to get to differentiate in our approach, depending on that level of fairness and ability to share what was a really unpleasant situation and share the burden of it. And so I think that was something
Do you think that was a dangerous precedent for real estate companies to set, to forgive rent like that? Or...
Yeah, I certainly not for those small traders.
Yeah, with the independent traders, that seems like you basically saved them. And
yeah, and it's the right, fairness just suggests that's the right thing to do. Yeah, I think it wasn't so much actually that we or others in the industry were setting that precedent. In a way, that the government of the time set the precedent, and it was a difficult situation, but there was this moratorium, which meant that effectively our lease contracts got ripped up. It turned out it was temporary, but at the time no one knew if that would continue into the future. And I was slightly worried about the precedent of that, because was it fair that a retailer that's a bigger business, more profitable than British Land, doesn't have to pay the rent, whilst British Land still has to pay our banks and our bondholders? So we're honouring our obligations, but we weren't receiving. And so that was a kind of difficult thing. But actually, we had a good relationship and have a good relationship with our big retailers. And I would say 95% of them were really good, and it was a grown-up conversation, and we got to a fair outcome. One or two took advantage of it, but people have long memories and things come around, so maybe that's not been so good for their longer term business to do that. So look, I think around that area of how we treated customers in a pandemic, that was an area where we've got a better plan now than we did at the last time round. But risks are always pretty hard to... You can prepare for a crisis, but you're almost certainly preparing for the wrong crisis, I think.
On a personal level, how do you approach problems like that? When the mess hits the fan, so to speak, what are your first moves? How do you strategize on something like that? What's your methodology?
Yeah, depends on what the nature of the problem. I think people say I probably attack problems from two angles. There's the kind of instinctive big picture, like what kind of themes are you seeing? What feels fair, for example, in what we were just talking about, and then the bottom up, I do believe, maybe it's my background of being an accountant, maybe it's being a trader, looking at the analysis, getting the data. But I think important not to kind of, people talk about paralysis by analysis, and I think you want to look at the data, evaluate the data, but don't want to just look at the data. You need to have that feel and big picture and get those trends. So I try and do a bit of both of those, but what's really important is not just what I do. You know, I've got a management team, and they're a bunch of very talented people. So the best thing I can do is get our senior team together, say we've got a problem, and try and work out a path through it. And, you know, I might be able to help round the edges, a bit like those escape rooms.
Yes.
Yeah, you know, there's people much more capable than me. My job is just to maybe go, if everyone's talking, to go, have we forgotten about this over here? Which is exactly what happens in that escape room. I'll be like, what's this sign here telling us, you know?
When you encounter a problem that you don't know the answer to, you mentioned your team. Who else do you go to? Do you go to mentors? Do you go to former CEOs? Whose sort of coattails do you tug on to say, oh, that's, you know, I'm not so sure about this one?
Yeah, and it was something I didn't appreciate when I came into the job, but having that support network is really important. I mean, people know about boards. The board and the chair are really valuable resources for a CEO to tap into. And I've really found that when things have been hard, you know, I can pick up the phone, go and see my chair. I've got a new chair, but had a chair for the first 4 years, the same one. And I think we'll operate in a very similar way with the new chair. We just wander into the office when you've got a problem and go, look, I'm thinking about A and B. Look, they probably want you to come with a couple of suggestions rather than I don't know what I'm doing, because that I shouldn't really be the CEO. But if you go, look, I've got a couple of things and I can't quite work out how I should weigh the pros and cons, just getting someone's insight. But I also have a mentor, which is great, and very fortunate that British Land pays for a coach as well. And that's invaluable. I go along to those sessions thinking, have I got time for them? And when I come out of them, I go, actually, it was probably the best hour and a half I spent.
How have other CEOs managed British Land, and how does their management style differ from yours? What sort of approach do you take?
Yeah.
I noticed you're very team-oriented. You have the breakfasts with people who are, you know, I wouldn't say rank below you, that's not a good way of putting it, but other people in the organization. You're on all tiers, you try and cultivate an atmosphere of engagement.
I do, and I think we talk at British Land about being a small, big company, and I think it's one of our key advantages, because you gave some of the numbers at the start around the size of the portfolio, and it is a big portfolio, but actually we're 640 people across British Land, and so that does create a business where you can, in time, know 25-50% of your colleagues pretty well, and that's quite powerful. So we try not to have a lot of hierarchy, try and take advantage of being able to be nimble like that, and that's where things like kind of breakfasts with the team come into. But you sort of mentioned other CEOs. We've had 4 CEOs of British Land, and the first of those was Sir John Rippler. He was effectively the founder. He bought an existing company called British Land that actually was set up to give people and enable people to have a vote, because at the time you needed to have a land interest. This is in 1856 to get the vote. And so to enable those people to get the vote, British Land was set up. They could buy a share and then they'd have a land interest. Or sorry, they'd get a land interest and then they could have the vote. Had Sir John bought that business in the 60s and 70s, and he was a very entrepreneurial go-getter, who really had a nose for a shrewd deal and a great commercial acumen. And then actually real estate market changed a little bit. It became much more about how you service your customers. And the next 2 CEOs, Stephen Hester and Chris Grigg, focused very much on our product, our people, the diversity of the business. This is a theme that comes up a lot. Look, again, it's a bit like the environmental piece. It's the right thing to do, but actually a more diverse workforce at British Land means that we're more representative of our customers and we deliver deliver better products. So look, I've tried inevitably to take a little bit from each of those. I want British Land to be a commercially shrewd business that's known for doing good deals, but also creating first-rate product for our customers. And I like to do it in a way where we make the most of the great resources that we have in our people.
What is an opinion or perspective about the industry that you have that not many others would agree with you on?
That is a brilliant question. I think people within the industry would agree with this, but I think most people across the UK would disagree with this. And it goes back to your kind of talking about the Disney film Up. I think real estate and property developers have a bad reputation out there, and that we're out there just for our own good. We don't deliver any benefit at all, and I think people probably forget that we're delivering the places, the offices, the schools, the hospitals, the homes that makes the UK a better place. And we're very focused on place and product. So I think the image of property development is probably a bit, the reality is different from the image, would be my.
To finish with, I'd like to talk about investment. You have some fantastic partnerships with very large foreign investors, sovereign wealth funds. How do you go about cultivating that investment, building those relationships? As a CEO, I imagine there'll be leftover relationships from the past head of your company, but you have to build some of your own. How do you go about doing that?
Yeah, it's quite a big part of the role. And when we think about investors, effectively two types. There's the investors that own or may own our shares, so equity investors, and then, as you say, the partners. And I try and devote similar amounts of time to both, so seeing them regularly.
What do you look for in a partner?
That is about cultural alignment.
Okay.
That is probably the most important thing. So sometimes people say, yeah, the best partners are the ones that are passive, that have got really deep pockets and low cost of capital.
What's the problem with that?
Well, there's not necessarily any problem with that, but actually we found that when you bring in partners that can add something to what we're trying to do, that's when you get the most value. Yes, we like them to have low cost capital. Sometimes we like them to be passive, but genuinely our partners have pressed us on particular things on our assets over time. And I think we've ended up with a better result because of that. You can go into these things with an arrogance of British Land knows best. We know what we're doing, but it's amazing. It's just, what I was talking about. Get a variety of views, get different opinions. It won't always work. And sometimes that sort of tension between you and a partner when you're just deciding on a new course of action is really healthy. If we didn't have that and we were doing it on our own, we might have ended up with an inferior outcome. But yeah, it's a big part of my time. I really need to understand what they want, where their priority areas of investment are, what type of return horizons they have. And then it's about us creating the right opportunities for them and cultivating a relationship, because when you're doing real estate development, for example, things go wrong on a project, they always do, and it's being able to get around the table and find a solution. So that's where, in answer to your question, cultural alignment is so important. What
do you hope that your legacy is as someone who's a steward of the built environment of London?
Yeah, I hope that for me, for British Land, that we deliver really great real estate that stands the test of time, that it isn't being demolished in 20 or 30 years' time, that these buildings are still standing. I mean, we're in a very fortunate position. We do get to show the skyline of London, and one of our previous chairs, he said to the team, he said, I don't think there's a single person in British Land who's not proud of one of the buildings we built. It was the Cheese Grater building, and that's always resonated with me. But yeah, to continue to do that. And I hope that we can really make inroads in creating this real estate that is very efficient from an operational perspective, and play our part in bringing down carbon emissions across the UK. It's a kind of shared responsibility, isn't it, really?
That's a great legacy. Simon, thank you very much.
Charlie, no, thanks very much for having me. Really enjoyed that. Thank you.